Okay guys, it's Sunday the 4th of March, so let's have a look at Australian dollar, US dollar. We'll have a quick recap of the market from last week in relation to the Sunday analysis that we did last week, and then we'll have a look at the market, the key levels and what we're looking for the day trading week ahead. Okay, so with Australian dollar last week, what we went over was how we had the key levels really sitting up at the top of the levels we went over, and also down toward the bottom of the levels we went over. Now we went over how if we broke down below this level right here, we would then expect the move down to at least this 715 level, and then potentially down toward 7,700. So what we can see first of all is on Thursday, the market came down, broke below the level, came all the way down, tested at 715, which is where it bounced. For the start of the week, on Friday, we were testing up at this level of resistance. We went over how if we broke up above this level, we could then look for the move up into the zone up above. That's exactly what we did on the Monday. The Monday actually came all the way up and tested at the 894 level, which is where we found the rejection. On the Tuesday, we broke up, we tested at our 63 level, we found rejection. We came all the way down, started to break down below this level right here. We then tested at the 57, all the way down, press back up. Where did we test as resistance? Our 775 level. So again this week, the zones are pretty much staying the same. They are showing us now on multiple different reactions that they are being respected. So we don't want to fiddle around with them too much. This zone here at 7894, just want to bring this down a little bit towards 7890 right here. And moving ahead, really, the key zone on this market still, or I would say now, it's really 911. For the market to start turning more bullish, we need to start breaking up above this 911 level. If we do, the pullbacks and then looking for that bullish continuation makes sense up into the zone up above. If we start breaking up above this zone, again, it's good to start looking for stronger bullish continuation, potentially all the way back up then toward 7990 and the 8000 level. With where we're testing at present, we've broken down once and broken down twice. However, on the daily time frame as yet, we've not given confirmations that the market is looking to accept below this level. So we've broken down, but then we've closed back up in our support and resistance zone. We did the exact same thing on Friday. Let's get rid of these arrows. So the first thing is, if we break down again, once again, it remains a good level to look for resistance and potentially those moves back down toward 7715 and the 7000 level. Let's mark those in. Really all the way down to, take it a little bit lower, we'll take it down to 696 right here. As long as we're continuing to break below this level, it's worthwhile looking for continued bearish positions down toward that level. Up above also, if we start to press higher, this remains key resistance at 7788 up toward 7805. So if you see the market pressing up, resistance, this level remains resistance also. Now we have put in a spike at, let's have a look, 77 or about 7740. For me, this is a little bit more of a minor level. 7740 down toward 7730. What it is useful for is, I'd be careful with buy positions coming off of that level, but what it is good for is if we start to break back down below it, looking for the bearish positions and that move back down to the 7000 level, which would then become key support once again. If the market is starting to break back up above this 805 level, yeah, around about 805, so 7788 to 7805, again, this becomes a good level. It's currently resistance. If we're breaking up above, again, it's a good level to look for bullish bounces up toward at least 7820, but potentially then testing back at the zone up above, which is 7830 to 7845. We're just looking at how the market has been reacting to these zones. It's respecting the zones, but we're looking how the market is moving as it is breaking these zones. And it's giving us the confidence that if we're breaking up above zones, we can start looking for stronger bounces into the next zones until we start to really accept down below this level or start to accept up above this level. So it's relatively similar from last week. The key levels are up above. Right now we're testing at the key level down below. If we are failing again at this level, we'd expect those tests down at the 7700 to 7715 level. And then we have a couple of levels down below there, which are worthwhile going over. Really the key levels, they start back down at 76, around about 7650. Let's mark it in, 7650, really all the way down to 7640. This is a very key level of support in the Australian dollar. Up above there we have 7685 down into 7677 right here. Okay, so those are the main zones going into next week. So quick recap. It's really if we start breaking up above this 890 to 911 level, the market is then starting to turn more bullish. You start looking for the bounces up. If we break up above this level, it's then turning more bullish still, and I'd expect to see really up toward 8,000 tested. We're still testing at this key level of support. If the market continues to break down, reject at this level, we can look for the moves down again into at least that 7715 to 7700. We have a more minor level in between, 7730, 7740. As I mentioned, want to be a little bit careful of potential buys from there. Very key support, 7650 to 7640. And then up above, this remains key resistance. If we're breaking up above, we can start looking for those bullish bounces. Again, resistance up above, resistance up above. If we are starting to break up above both of these levels, I'd also be happy to look for bounces from either one of them. Okay guys, so that's everything for this week on Australian dollar. As always, I hope that was helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.